Hello YouTube, it's a Faceless Man here, and today I have a quick video on trying to answer a couple of questions that a lot of people have been asking me. Now, it's going to be pretty much on when is the right time to get into a dividend stock. Now, there are two different answers for me and two different methods that I use, and that depends on it being a dividend aristocrat or just a dividend paying stock. The difference between these two is that a dividend aristocrat is a big name stock, kind of like Procter & Gamble, Coca-Cola, AT&T, General Motors, companies that have been paying and increasing their dividends for 25 plus years. I do own Prospect Capital, Gladstone, kind of pretty much those companies, lower end dividend paying companies, which are a bit more riskier, but have a good return. Now, the way I jump into kind of like Procter & Gamble, Coca-Cola, I usually just catch a pattern. So if you see within the year's pattern, this one has been doing fairly well. So it's been hard to catch this one in a down spot. So again, I've just been constantly buying from this, but I've owned this stock back when it was down here when it crashed. So I've gained a great gain after this. It's been doing nothing but going up since. So I've loved it. I bought stocks up here, and I didn't panic when it crashed down here. I ended up buying more and more, and that's been going up. And this stock has made me a crap ton of money. So do understand that, you shouldn't panic when a dividend aristocrat crashes, because it really has no reason to. It was just a little iffy, crazy thing in the market. But again, it came up and it made me a good return. Now, with dividend aristocrats, the way I see it is I don't care at what price I get them, because I know within 5 years it's going to be a lot higher than it was back then. I know between the compound interest, I'm going to be having more returns than losses. That's how I see dividend aristocrats, and I'm pretty much not going to end up selling it. I'm just packing them up. Let's say if I own 20,000 shares of Procter & Gamble, in 20 years from now, I want to have 100,000 shares or whatever it is. I'm never going to sell these. I'm just going to keep packing them up. That's how I see dividend aristocrats. Now, with Prospect Capital and Gladstone and stuff like that, they're temporary stocks. So when is the right time to buy them? Now, as you see here, it's very important to look at the statistics. As you see, the open says 119.80. Today's high is 121.05. Today's low is 119.78. And my main key is looking at the 52-week high and the 52-week low. With Prospect Capital, these, vary. So, for example, let's say Prospect Capital. Let's say this was Prospect Capital. If Prospect Capital is closer to its 52-week high, let's say it was at 121.76 or 120 or 119, whatever, I wouldn't jump into it. I would wait till it drops down to like 90 or 80, whatever, and then buy into it, because stocks like that have their window, which they kind of stay in that window. So, it's a closer average. So if you guys don't get that, it's like I'm going to buy those stocks and kind of be patient with them when they're closer to their 52-week low instead of their 52-week high, because they do have a pattern. As you see, a lot of these have a simple pattern. They have their real high up and they come down. They have the real high up and then they end up crashing a little. So you have to find that pattern, because they constantly do that. And with smaller stocks like, again, Prospect Capital and Gladstone, AT&T is in that section right now. You want to get closer to its 52-week low, and that's when you know that it's a good time to buy, when it's closer to its 52-week low. So if let's say there's a $10 average, let's say the stock is at $35. Its high was 40 and its low was 30. When it's around 35 to 30, if it's between those two, that's when you want to buy heavily, because it's eventually going to get back to its 52-week high. Once it gets there, you can either sell or just keep. And when it comes back down, that's when you keep buying, because it's just going to have that window of average. It's constantly going to be going up and down, and that's its volatility. So catch that pattern. And if you do, just understand that's the way I work it. It's worked for me for these last 11 years. So if you like the video, guys, please like, share, and subscribe. If you have any more questions, feel free to ask me anything. Add me on social media. If you want to add me on social media, just go down in the comments. Let me know where you want to follow me, and I will put my information there. If you have any ideas on any content that I haven't put out before, please let me know. I usually don't drop a lot of videos because I don't like repeating my content. It's already there. Other people have either covered it. So again, if you like the video, please like, share, and subscribe. Give ideas down in the comment selection below. If you're new to Robinhood, or you want to use that little code, you guys can add your code in the comment section so you guys can help each other get free stocks. I don't know if you guys know about that. So yeah, again, this is a great community. I hope that we can all help each other grow. And again, thanks for watching, and I'll see you guys in the next video.